Information returns are the tools the government uses to cross-reference the money you pay out against the income others report. Failing to file these forms is one of the most common ways to trigger penalties. If you've ever worried about which form goes to your web designer versus your landlord, this episode is for you. Let's get started. Information returns are essentially you raising your hand and saying, "Hey, I didn't keep this money. I paid it to Sarah for web design." The IRS then checks Sarah's tax return to make sure she reported it. It's a giant matching game, and you do not want to be the one holding the missing piece. Let's untangle the alphabet soup of the big two forms, 1099 versus 1099 MISC. If you've been in business for a while, you remember the old days when almost everything went on Form 1099 MISC. Well, the IRS decided that was too messy. They split the team up. First, we have IRS Form 10999 NEC. The NEC stands for Non-Employee Compensation. Think of the NEC form as the Doers form. This is for the people who actually did something for your business, but aren't your employees. Did you hire a freelance graphic designer, a local plumber to fix the office sink, a consultant to help with strategy? If they provided a service and they aren't on your payroll, they get the 1099 NEC. Then we have the Old Faithful, Form 1099 MISC. Since the Doers moved to the NEC form, the MISC form is now mostly for passive payments. Think of the MISC form like a landlord or an intellectual property holder. You use this for things like rent payments for your office space. It's also for royalties, prizes, or awards. So NEC is for sweat equity, people working. MISC is generally for asset use, renting space, or using ideas. Now, do you have to send a form to every person you bought a sandwich from? Thankfully, no. There is a magic number, and that number is $600. For both 1099 NEC versus 1099 MISC, the reporting trigger is generally $600 paid over the course of the calendar year. If you paid your web designer $500 for a logo, no form is needed. If you paid them $650, you need to file. However, because this is tax law, there are always exceptions to the rule. First, let's talk about royalties. If you pay royalties, maybe you license music for your podcast, the threshold drops all the way down to $10. The IRS wants to know about those small passive income streams. On the other end of the spectrum, we have independent contractor tax forms involving backup withholding. This is a crucial gotcha. If a vendor refused to give you their tax ID number and you had to withhold tax from their payment to send to the IRS, you must file a 1099 NEC regardless of the amount. Even if it was just $5, if you withheld tax, you have to report it. I want you to take a second and think about your last month of spending. Who did you write a check to? Was it a person or a big corporation? Was it for a service or for a product? If you paid Dave the painter $800 to repaint your lobby, that's a 1099 NEC. If you paid your landlord $2,000 for rent, that's a 1099 MISC. If you bought $1,000 worth of computer monitors from Best Buy, generally, no form is needed for buying merchandise. Distinguishing these correctly prevents penalties and keeps you off the audit radar. I want you to open your accounting software or pull out your check register. Review your vendor list from the past year right now. Don't wait until January. Categorize each payee by the type of service provided. Was it labor or was it rent? To determine exactly which 1099 form applies. But what if the person you paid isn't a contractor? What if they act like an employee? And what happens if someone pays you with a suitcase full of cash? We're going to cover the strict rules of W-2 employees and the IRS Cash Watchdog Form 8300 right next. We need to shift gears from the people who pop in to fix your website once a month to the people who are the heartbeat of your daily operations, your employees. And we need to talk about a specific high-stakes rule that I call the Cash Watchdog. Let's start with the relationship shift. At what point does the person working for you stop being a 1099 contractor and start being an employee? It usually comes down to control. If you're setting their hours, providing the tools, and dictating exactly how the work is done, you aren't dealing with a contractor anymore. You have an employee. And for employees, you do not use a 1099. For them, it's all about Form W-2, the wage and tax statement. Unlike the 1099 EC, which just says, "Hey IRS, I paid this person $5,000, the W-2 tells a much bigger story. it reports wages, tips, and, crucially, the income tax, Social Security, and Medicare taxes you withheld from their paycheck. It's a heavier administrative lift because you're acting as a tax collector for the government. And remember, copies of these don't just go to the employee. They have to be filed with the Social Security Administration. If you mess this up, you aren't just annoying the IRS, you're potentially messing with someone's future retirement benefits. Now, let's pivot to something that catches a lot of new business owners off guard. I want you to imagine a customer walks into your business. Maybe you run a car lot, a high-end jewelry store, or a construction firm, and they hand you a thick envelope to pay a $12,000 bill. Your first instinct might be, great, cash is king, no credit card fees. But the IRS has a different instinct. They have a compliance measure designed to sniff out money laundering. This is IRS Form 8300, or as I like to call it, the Cash Watchdog. Here is the rule. If you receive more than $10,000 in cash in a single transaction, or 2 or more related transactions, you must report it within 15 days. Now, I want you to really listen to how we define cash here. It's broader than just a briefcase full of $100 bills. For Form 8300, cash includes U.S. and foreign currency, obviously, but it also includes cashier's checks, traveler's checks, and money orders if they have a face value of $10,000 or less. Why is that? Well, imagine someone trying to wash money. They might not carry a sack of cash, but they might bring you 5 $2,500 money orders to pay for that project. To the IRS, that triggers the alarm just as loud as physical bills. Why does the government care so much? It's about visibility. They are monitoring these flows to stop illegal activities. When you file Form 8300, you are essentially helping to maintain the integrity of the financial system. It's a serious responsibility. I want you to take a second and reflect on your last year of business. Did you have any high-ticket clients who preferred to pay off the books or settled a large invoice with a stack of money orders? If you did, and that total hit the $10,000 mark, you entered Cash Watchdog territory. So, here is your mission for this week, and it's a vital one. I want you to audit your transaction history for any cash payments over $10,000 received this year and verify if Form 8300 was required. Don't let this slide. Catching a missed filing now is infinitely better than the IRS catching it for you later. Now you might be thinking, Alex, all these forms require a lot of personal information from the people I pay. How do I get that info without chasing them down? Well, that brings us to your best defense against penalties, the sword and the shield policy of the W-9. Let's talk about how to protect yourself. Here is the million-dollar question, or at least the question that could save you thousands in fines. How do you actually get the data you need to file those forms without losing your mind when January rolls around? Let's talk about your best defense first. Form W-9 requirements. If you take only one thing away from today's episode, let it be this 3-word mantra: no W-9, no check. I see so many business owners scramble in late December, calling up a web designer they used back in March, begging for a taxpayer ID. It's stressful, and frankly, it's unprofessional. The strategy here is proactive administration. Treat the W-9 like a ticket to an event. If a vendor wants to enter the VIP section, which is your bank account, they need to show ID first. That ID is the W-9. Why is this so critical? Because of the risks of missing data. If you pay someone and later realize you don't have their taxpayer ID TIN, you expose yourself to something called backup withholding rules. Basically, if the IRS sees that a payee hasn't identified themselves properly, they require you, the payer, to withhold a specific percentage of that payment and send it directly to the IRS. You essentially get deputized as a tax collector. It's a mess, it complicates your bookkeeping, and it strains vendor relationships. And then there is the sword, the cost of non-compliance. The penalty for not filing 1099 forms or filing them with incorrect info isn't just a slap on the wrist, it's a hit to your bottom line. These penalties are indexed to inflation and they scale based on why you failed to file. The IRS looks at intent. If you miss a deadline because of a hospital stay or a fire, that might be considered reasonable cause. But if you just ignored the rules because you didn't feel like dealing with paperwork, that is classified as willful neglect. The fines for willful neglect are significantly higher, and unlike other penalties, there is often no maximum limit. It can get expensive, fast. Now, take a breath. It's not all doom and gloom. There are strategies for penalty mitigation. The IRS understands that we are human. If you make a small error, what they call a de minimis error, like a typo on a dollar amount or a name, you often have until August 1st to correct it without getting hammered by fines. But relying on corrections is a shaky strategy. The goal is accuracy from day one. I want you to pause for a second and reflect on your own business. Think about the last freelancer or contractor you hired. Did you get their paperwork before you Venmo'd them? Or did you just pay them and tell yourself, I'll figure it out later? If it's the latter, you are walking around without your shield. Here is your takeaway. You protect your business from liability by enforcing a strict process. Don't pay until you have the data. It's that simple. Go to the IRS website right now, download the latest Form W-9, and integrate it immediately into your new vendor onboarding process. Put a link to it in your email signature. Print a stack for your desk, whatever you have to do to ensure you never cut a check without it. Stay safe, keep your filing simple, and keep your business sound. I'll catch you in the next episode. And that brings us to the end of our deep dive into the IRS's Trust But Verify system. We've covered a lot of ground today, peeling back the layers of information returns so you can stop worrying about audits and start focusing on your business growth. We started by clearing up the confusion surrounding 1099 NEC versus 1099 MISC. Remember, the IRS Form 1099 NEC is now your standard for reporting non-employee compensation. That means your web designers, consultants, and freelancers. We also touched on the Cash Watchdog, Form 8300, and why transparency with large transactions is non-negotiable. But if you take one thing away from today's episode, let it be the no W-9, no check policy. Collecting those independent contractor tax forms up front is your shield against penalties and the key to a stress-free filing season. It's a small administrative step that builds a massive financial safety net for your business. Thank you so much for tuning in. I know tax compliance isn't the most glamorous part of being an entrepreneur, but mastering it is essential to keeping your business safe. If this episode saved you a headache, please subscribe and leave us a review. It helps us reach more business owners just like you. Until next time, stay compliant, stay confident, and keep making sound financial choices. This is Alex, signing off from the Safe Simple Sound podcast. Take care.